What's going on, man?
Not much. What's going on with you, Money?
Man, I'm back. I'm finally back. Yeah, I was sick for the last episode. So Veli had to do his demonstration on 11.5 on YouTube. And then we thank y'all for the support, because it's still trending, as of right now too. But yeah, this the return of Money now.
Yeah, the return of Money. I know y'all glad to hear him back.
Yeah. So yeah, we had a little break, and then we'll continue to explain what's going on in our Below Zero side series. If you follow our Instagram and TikTok, Money and Veli _ podcast, it's going to be in the description below too, especially when this video comes out. So right now, we're still in season 1, mid-season, episode 12. So we got the good news and we got the bad news. So we're going to have Veli started off.
Yes, sir. We got the good news and we got the bad news. So, of course, the good news, Money back. That's the first good news. Money back, man.
Yeah, Money back. That's the first good news. Is
Money
that the only good news?
Nah, we got some more. Because this little session is more so about recent news. So, hey, second part of the good news. Amazon stock split. So, I know y'all might be wondering, how's that good news? Well, of course, this is a podcast about stocks and cryptos. So, anything good about stocks, I got to say something about it. Now, Amazon, they had their stock split, I think, June 6th. 2022. It was a 20-for-1 stock split. So what that means is every share of the company stock is split into 20 new shares, or each share will be worth 20th of the original share value. So, like for us, what does that mean for investors and traders? It just means, well, several things it can mean. One, we get it for a cheaper price. Because originally, I can't even remember what the original price for Amazon was. I know it was a stupid price, but now it's cheaper because of the stock split. So they're literally splitting the price of it. It's a 20th of what the original share value was. So it's a lot easier for investors to get a hand on this particular stock. And it brings a lot more people in the market because, again, I don't have to get a certain price, but not the same as that price that it was earlier. It's not as astronomical. It's a lot easier for you to get it. And then stock splits are usually a good sign of optimism. What I mean by that, you're not going to see a company that's not doing too good in the rankings as far as earnings and their returns. They're usually not the companies that do stock splits. It's usually the companies that are doing pretty good, up and well companies, blue chip companies, that the earnings are good, returns are great, just everything is good about the company. When you kind of have a very good outlook on them as far as returns go, as far as money and what they earn, and seeing where they're going in the future. If everything looks good, those are the ones that's usually doing stock splits. So for them to do a stock split, they must be doing pretty good. Another reason, it's easier entry into the Dow Jones. Now, what I mean by that is, I think as far as one of the key entryways into it is that particular underlying stock has to be worth a certain price. And the price that Amazon was worth, it wasn't getting to the Dow Jones with that. So with that stock split, cutting that price down, they should have a better entryway into the Dow Jones. So that means getting into another category of the market. More investors can get their hands on it. More people can see it. And potentially down the road means more money in their pockets and just a better outlook for their future. So that's kind of some of the good news for Amazon. So now we're going to kind of talk about Tesla. We're going to move on to Tesla for this one. So
Right.
So recently Tesla had their earnings estimate. Well, it came out. So it rose to 56.6% compared to so it's pretty good. The earning calls were pretty good. Now I know y'all wondering what exactly is an earning call. Earning calls allows a public company to discuss its past performance, future plans, and kind of answer some of the questions from analysts, investors, and media personnel. And essentially, all of this goes into fundamental analysis. And again, these earnings come out quarterly, which is technically the earnings are, I think, December. I want to say March. I can't remember the other two, but usually they post it a couple months after those particular quarters just to give themselves some time. And again, it's just a report of what they made for the quarter. And the reason for that, it goes into fundamental analysis. Fundamental analysis is just a method of determining a stock's real or fair market value. And a good example would be if an investor can perform fundamental analysis on a bond value by looking at the economic factors such as the interest rates, the overall state of the economy, and then studying information about the bond issuer, such as potential changes in its credit or rating. All fundamental analysis, you're looking at everything about the company from a financial standpoint, from an economical standpoint. You're kind of like gauging as far financially where the company is going. That's what fundamental analysis is. It's trying to judge financially where the company is going. So our earning call can definitely is a fundamental tool within, of course, fundamental analysis. It goes hand in hand. It is very helpful. Now, it's a little bit different from technical analysis. Technical analysis is more so, it does study the history of the stock, but it's more so for price action. It just studies the price history of that particular stock or company. So maybe another episode, I'll get into technical analysis later. But no, that's kind of a little bit of news for stocks. So
Yeah,
we're gonna
and
go
then
to
there's like more news, on Tesla also, just like all this part like Belly went over, the difference between the technical and then the fundamental analysis when you looking at these companies. Now you can use both, but depending on what type of investor you like, you're gonna be seeing one or the other more or just both. Now for like Tesla, there's going to be my side on this. All right, so for Tesla news part 2. So Tesla, we know, had bought a lot of Bitcoin last year. As it's saying it in the article, it bought $1.5 billion worth of Bitcoin early last year, but now as the end of quarter 2, they've converted approximately 75% of Bitcoin purchases into fiat currency. So Tesla said in the second quarter earnings statement on Wednesday, the company said those sales added up to about 936 million in cash to its balance sheets. So, okay, so they sold most of their Bitcoin shares, but still at a loss, because if they had the same amount of value total, it would have been 100% would have been 1.5 billion still. Then 75% would have been 1,125,000,000, but it wasn't. 75% of their shares was 936 million in cash. So they still had sold at a loss, but who knows? It probably could have been much worse. They probably still would have been what you call a stop loss too. And then this could be good news for Tesla, and then this could be bad news for everything, because like when companies sell a lot of shares of something, I'm not saying it's guaranteed, but something happens after that. Probably they know something that we don't know going on with Bitcoin. So, and then this leads to another thing too. Like well, after Veli kind of explained something else, then I mention that with the Richard Hart thing going on. Well, you got anything for the Bitcoin thing, Veli?
Yeah, I was just about to say something before I hopped into the next topic. If some of you don't know what a stop loss is, this is more so for the active trader in a sense, or even when in a sense passive investing too. But you're not going to see it as much if you're a passive investor. It's more so for the active. A stop loss is if I'm trading Apple, even if I'm planning to buy it, whatever the case is, if I'm planning to buy it, if Apple's like $160 and I plan to buy it at $160, but I don't know which way the price is going to go. Let's say I'm hoping the price will go up. So I buy it at $160. A stop loss would be if the particular stock goes down in price to a certain extent, wherever I decide where my stop loss is going to be, I'll either sell it or get out the trade. This is mostly when I'm trading options. If I have a contract and my strike price is 160 and Apple's trading around that same price and I'm going long, I'm hoping that the price of the stock will go up. If the price happens to dip, that's fine. I'll still hold on to it. But if it dips to a certain amount around an area we call our stop loss, it's basically how much I'm willing to lose. If it hits that area, the max amount I'm willing to lose, I'll get out of the trade. That's what a stop loss is. So that 936 million that they had, when you add up the numbers, I'm not saying this is exactly what they did, but margin. And a lot of traders have a 10%, 15, some are comfortable with 20, but a lot of them have a 10 or 15% stop loss margin. So when you add up the numbers from, I think, what was it? In total, they had 1.5 billion, but they only were trading 75% of that, which was, I think, 1.25 billion. If you take 10% from that, it equals to the amount they lost and brings it down to 936 million. It was still within a 10, 15% stop loss margin. So I'm assuming that's what it was. I have no other information to confirm this. This is just personal opinion, just looking at what little bit of information I had on the go. So that's kind of it for that one, unless you got something about that money.
Yeah, it's just like he's saying the same thing I said too. Like it's not guaranteed, but it's a possibility. That they was doing a stop loss because it looks like it. Doesn't mean it is, though. But yeah, I mean it could be something else. But it'd be a good guess too. So just keep it in mind. That's just a possibility. But now what a stop loss is. Like how Belly explained it.
Yeah, maybe
So
I'll do like a little 5-minute video later on. I'll upload it sometime next week.
Oh yeah, Belly's demonstration. Yeah, let's go.
The demonstrations. Let's go. And let's get on the next topic. So right now we're gonna talk about Twitter and Snap. So far, we've been on earning calls. So far, because like I said, this is more so recent news. So we gotta talk about something, right? So
Yep.
recently, Twitter had its second earnings report. This was on July 21st. So this was what was it, Thursday? Just Thursday. So apparently, they missed earnings and revenue. So earning calls weren't exactly what a lot of people were thinking. They kind of missed the margin. And what's funny is Twitter places the blame on missed earnings on ad industry turmoil, which I can understand it. They're not getting a lot from their ad revenue on the social media platforms, but they also throw some of the blame towards Elon Musk. Funny enough. And if some of you may not know why they blame Mr. Musk, is because I think what about a month, maybe 2 months ago, he had put out a statement saying he is willing to buy Twitter for a certain amount of price. He was basically offering to buy it at a certain amount of price. The offer hasn't been accepted. It hasn't been declined. It's been a lot of back and forth. But again, this goes back to influences within the market. People can influence the market. Twitter did, but the price did have a sort of significant drop because of that. But now I think he's facing some. I think they are going to meet in court. I wouldn't say he's facing some legal action yet, but he is in court. I guess that would be a legal action, but nothing like set in stone. But they will be having some court hearings about this. So again, this is why I'm being bad. Market influences. There are things that can affect the market. Influential people. Elon Musk, he can affect the market. So,
Definitely.
yep. And he has a lot of responsibility because you have the whole entire conglomerate of Twitter saying he's somewhat to blame for missed earnings. Of course, other things too, but he's definitely a part of it. But that's them. So let's move on to Snap. Snap's had a second quarter earnings call. I think was I kind of, if I'm not mistaken, it was either today or yesterday. I think it was today, Friday, July 22nd. So Snap missed his second earnings call. It was expected to be a 38% in growth, but they missed about a large margin. It was only a 13% growth. It was expected to be 38, but it was only 13. So that's a big margin gap. And because of that, shares dropped more than 32%. Okay, it was trading around $11.07. I think originally it was around, I want to say 30. Don't quote me on that. The last time I checked, I should be more up and up on the price because it was funny enough. I used to trade Snap. I still do every now and then, not as much as I used to, but I used to option trade on Snap. Made some pretty good plays and executions on there. So I definitely will be looking more into this. But that's kind of it for the news of Twitter and Snap. Anything else on money?
No, no, and I remember you was talking about this too, making some off of Snap. So even like shares that are doing bad, you can make some money off there too. Depending on how you trade.
Oh, that's what it was. I'm glad you said that because I do have some charts. So, and we all love charts. We're gonna check out the Twitter first. I completely forgot about the charts. So I have Twitter pulled up. I know most of you can't see it, but I think I have it pulled up on a 30-minute chart. And I know all of you can see these blue lines right here.
Yep.
Now, in the recent episode we did, I think it was last week, 11.5, I talked about support and resistance. So here's another perfect example of support, which is your floor, is at the bottom, and resistance, which is your ceiling. You want to break through the ceiling. Here's a perfect example of it. And if you look at the chart a little bit closely near the bottom, you see a red E. That signifies an earnings call. Because again, like we was just discussing, usually when some companies don't meet the estimated earnings, their price will drop a little bit. When they do meet their earnings or surpass it, the price of the stock will rise. Reason goes back to fundamental analysis. If the company's not making what's expected to be, they're not doing financially well as a company, or they're not doing something right from a marketing standpoint, whatever the case may be, investors make a move, whether to withdraw funds or to import more funds. Most of the time when they don't meet earnings, it's a withdrawal of funds. It's the sell-off. And then the opposite happens when they surpass the earnings or at least get exactly at the equal amount of earnings. they'll receive more investors and the price will go up. But again, here's an example of it. It was trading at 30. We'll round it off to 40. It was trading at 40 around right here. And then it dropped, bounced off this support, went back up to resistance, bounced off it, dipped just a tad bit, bounced off it, dropped again, bounced off it for a third time, fell, kind of waded in the water right here. And this is around earnings call right here where it stopped in the middle. This was earnings. It dropped a little bit, went back up to resistance. It peaked above it. And the reason it stopped just a little bit above it, that's kind of like where I finished my inspection of it. And that was like the current trading price at that time when I was looking at it. So right now, I currently don't know what it is now. But that's the chart for Twitter. We're going to move on to Snap real quick. So Snap is a little bit different. You can kind of see here, Snap was, I guess, doing fairly well. But around earnings call, and they missed it. This was that severe 38% drop they were talking about. This is that drop. It was trading at $16.50 up here, and it dropped all the way to $11. That was that 30% drop they was talking about around earnings when the earnings came out. So if the earnings aren't good, a lot of times, the general rule, the stock will usually drop in price. So that was just to show you a little bit of representation of what we mean by the stock dropping, earnings call. That was just to give you more of a visual representation. So that's a little bit. That was kind of all I have from my side going on stocks.
Yeah, and then for both sides, between the charts and then the earnings he showed is like the definition of using technical analysis and fundamental together too, as those two demonstrations. And you can do this in the options trade definitely, when you want to make a call, or the regular way, where you want to like decide what time you want to buy or sell.
That's true.
So now we're gonna go on to like more good news, which is Richard Hart. So I mentioned like in previous episodes. If I did, I definitely mentioned Hex, which is what you're going to see on the bottom. So that's the and Hex is an actual crypto. It's actual crypto. Is a digital certificate of deposit. So it's the type of asset where you lock it up and get a whole bunch of interest off it. So Richard Hart, he's the creator of Hex and the creator of this website called Hex.com, and that's how he advertises it too. And it's because it's so easy to enter, like just 3 letters in the word and then .com. And then also it's a website where you can lock up your Hex, and then you get all that yield. So the good news about Richard Hart is he's actually able to explain some of the stuff on Fox Business, and that's what he was on early this month, which we would have shared then if I wasn't sick. But anyway, I'm here now, so that's more good news. So he got to be on Fox Business explaining, the reason why he made Hex, and also like what he really wanted to say about Bitcoin, because he was a Bitcoin guy at first. And we all know that Bitcoin had dropped terribly. And, and then one of his responses was, there's a lot of things that Bitcoin can't do. So, and speaking of Bitcoin, he's usually right about calling the tops, and he brags about it too. Like, yeah, I called the top of the day. I did this, which he has a right to anyway, because people don't listen to him. And there's a lot of people who don't listen to him, but anyway, he's usually right about calling the tops. But now he's calling the bottoms, where Bitcoin's going to drop to, like the lowest is going to drop to. So yeah, it's been dropping, but it hasn't been dropping to where he said yet. But if he calls the top, I'll still be watching for that, because it's interesting. And the fact that he's usually right is crazy. So for right now, he's calling it to be at around 10 to 11K. So if you go back to what I showed you about Elon Musk or Tesla just dumping 75% of their Bitcoin shares, I'm not saying it is, but that's something. It's a possibility that could be linked to that. Maybe both of these guys know something that we don't know, and then maybe it could be that reason, or they were just doing a stop loss, acting smart, with their money, not losing too much.
That's
But
true.
it's actually real interesting when you look at it together. And yeah, it is true. And so that's the hex. That's what the actual crypto looks like. Now, what's interesting also is like right when Richard Hart, and he's coming out with a documentary too, but right when he was on Fox Business, this book called The Hex Phenomenon goes #1 around the same time. And then if you see the screenshot on the side, that's what the book looks like. And it's #1. It was #1 best selling for some time as in the service industry. It's still up there, but it was #1 at that time. And then that's how, and then it talks about not only hacks but how to get into crypto, how to invest, because not a lot of people know to invest or know how to invest. Because crypto was still very new. So, and it does require you studying. So, and not just jumping into, because crypto is already dangerous enough. So it is smart. You're going to write a book about an asset, write how to get into the game also, like how to get yourself set up. So best of luck to them, into the Hex community. And also Richard Hart brought up the fact that Tesla dumped a whole lot of Bitcoin shares in a debate he was having against other Bitcoin maxis, which he crushed on Twitter, in my opinion. Yeah, I can go look for yourselves. And even the website, y'all can go look for yourselves, because the website tells you information about Hex and about like a lot of the projects he's doing, if y'all are interested. But anyway, good news on Richard Hart. But now let's get into the bad news. And I know y'all been waiting for this.
Yeah, they've been hanging on. What's the bad news, money?
Because if you say like the dangers of the markets episode, 1 and 2, part 1 and 2, because dangers of the markets episode 3, and then we got another danger too, which are more recent events. And yeah, so we're going to start off with Voyager Digital on the next slide. So Voyager Digital has this popular exchange, that we just call Voyager. So I'm gonna run it back a little bit. So what an exchange is somewhere where you can buy your crypto off of if you're looking to invest. That's what a crypto exchange is. Now I'm gonna stress this again. Like, you should be keeping your cryptos on the exchanges. It's not financial advice, but it's self custody is safer. Actually storing them in a wallet so you can hold your own private keys. It's not your keys. It's not your cryptos. And then this the type of thing that these companies will argue in the lawsuit to save them from owing so much money. But anyway, that's what they was doing. People was holding their funds on this exchange. And then yeah, Voyager is a popular exchange, and I even use it myself. And I even got off there, because not everything you can take off at that too. I'm like, I'm not using this. But yeah, it's a popular crypto exchange. And what they started doing was freezing withdrawals. They froze deposits too for some time and selling, but definitely froze withdrawals. And that's bad if you have put your money in something and you can't take it out, especially cryptos. So now they filed um, bankruptcy not too long ago, a Chapter 11 bankruptcy. You know, I mean, yeah, they buying time to get back on their feet and pay some of the stuff off, but the fact that they went bankrupt and what's still holding on to people's money in the first place is still bad. You know, whether you're talking about a Chapter 11 or Chapter 15, and so what was the cause of it? You know, and that's what we're going to go deep into, and then we're going to actually bring a few things back. But just know that they lended $650 million to 3AC, which is Three Arrows Capital. But 3AC is just an abbreviation for it. So remember that 3AC is Three Arrows Capital. And yeah, that money's nowhere to be found. So, and then so before we get to the cause of it, we're gonna bring something back because this happened within this month, right? So we're gonna bring something similar that happened last month in June, which we're gonna go over to Celsius now. Now Celsius is a crypto staking and lending platform. Okay, yeah, they lend money, but staking, like I already went over in previous episodes, is where you get paid for holding your crypto instead of mining. But people was trying to stake off of handing their private keys to this company, which means handing possession of their crypto to them instead of just doing self custody, holding it inside a wallet. And this is another example why you don't do that. Now, we talked about Celsius before, but I'm gonna bring it right back. You know, because when you look at, because if you see the episode and then you look at Voyager, that's what you should be thinking about, or that's something that triggered right there. So, and then they have their crypto, they have their own coin called Cell, but that ended up dropping too. And for what reason? Well, you can see why, because they managed like $11 billion of their customers' asset. Everybody that held their money in Celsius, that's what they got and still got because they froze the withdrawals. And then they did this last month in June. Froze everybody withdrawals. And that's a lot of money. $11 billion of people's money. So,
Yeah.
and yeah.
That's a whole lot to freeze.
Yeah, that is. And a whole lot of money lost because, people can't take their money out. So, yeah, so they mad about that. That's sad, though. And the fact that it keeps happening. So, I mean, putting your crypto in these places is what defeats the purpose of cryptos in the first place. Just letting somebody else hold possession of your coins. Like the purpose of crypto is for decentralization and self-custody. So decentralization is there's no middleman. When you send somebody some money or something like that, there's no bank that you need to go through or whatever. It's between you and the protocol, between you and the person. No, that's it. Like there's nobody in the middle, and then there should be nobody in the middle holding your assets, just you and the wallet that you're holding it on. So, I mean that's how Bitcoin started. Just peer to peer, like you just it's between you and the person that you send money to. You're like you don't need no bank account or no bank, period. So that's what it is. And now where was I? Okay, so they lent money to Three Arrows Capital too. Now you heard me say this before. Like in Voyager, they did the same thing as Voyager. They lent money to 3AC. Now you see what they got in common. Freezing withdrawals, and then they had lent money to somewhere else or some other company, and then look at this. They filed for Chapter 11 bankruptcy.
There you go again.
There we go again. Man, you thought that was bad news enough? You got anything, Belly?
Nah, just bad news. Got more bad news.
Oh yeah, we got more bad news. Cause now we're gonna go to like where it started a month before that. Now I'll keep going back, a month at a time. This just to show you like what keeps happening over and over for the past 3 months. and how a domino effect this is. Because one bad thing can lead to like other bad things too. What you're seeing is an example of right now. Now I call this the Terra Luna crisis. So the company, behind this is Terraform Labs and Do Kwon, who is the CEO. So Terraform Labs got a top 10, well, had a top 10 stablecoin called UST. And and that was and it had DPEG. So I already talked, and we already talked about this before in the previous episodes, but we're going to run it back just like we ran Celsius back. So they had a top 10 stablecoin called UST that DPEG. So what stablecoins are is that they keep a 1-to-1 ratio with the dollar. Like it's going to be worth the dollar and then not supposed to change. I mean, it'll go like a point under, like 0.99 or 0.998 or something like that, but still stays at a dollar. It's a way for like people to preserve the wealth instead of just selling off because if crypto, they drop and they drop hard. So if you like make a profit, then you can just swap it into a stable coin to keep that profit. It's just one of the ways to do it. But other than that, though, that's how like a lot of people preserve the wealth, without having to sell off. So they had a top 10 stablecoin called UST. A lot of money was being put into it, especially to be a top 10 stablecoin. And then they had another asset called the Luna token, and that crashed too. See, not all stablecoins are made the same. Like you got stable coins like USDC that actually has actual dollars in reserve. It's actually backed by money. But you had UST that had no backing at all. That's what they was calling it, an algorithmic stablecoin. Backed by the program that was running it, called the arbitrage mechanism. Now I'm not going to go too technical with it. Just know that both of these coins, UST and Luna, was supporting each other at keeping the price up, like no backing. So, and then both had crashed. So if you had invested $1 million in the Terra Luna, it would have been $3. That's how bad the crash was.
You talking about a drop?
Yes, you talking about a drop.
That's like a chasm.
That was catastrophic right there. This ain't even number one. Imagine what the number one stablecoin would have did.
And boy, if I played some options on that.
And people did too. People did place bets on this that it would drop like months before it did, like a month or two before it did. It got paid, but the rest of the people lost money.
I mean, that's not funny, but
but what's funny is they did it twice because people was depending on Luna 2.0. It was like, oh no, we got all this Bitcoin in reserves, and then we're going to relaunch the project from the ashes. You watch, and then we watched, and it dropped 80%. People lost their money twice.
Not once, but twice.
Not once, but twice. So, like, you shouldn't have trusted it in the first place if it had dropped like that in the first place, because it caused a $200 billion crash in the crypto market.
Hey,
that's how bad it was.
200 billion.
A $200 billion crash because of these two. That's wild. And it started a domino effect. Other companies start falling. And yeah, it is crazy. So we're going to go over to the next slide too. So we're going to and then this one of the articles I found, and Watcher Guru is also on Twitter. So like a lot of people, get good crypto news off of Twitter, but he got his own, they got their own website too. So court filings revealed that 3AC, obtained 2 loans from Celsius, and 3AC is 3 Arrows Capital. And then we're going to go over, what 3 Arrows Capital is, but you keep hearing that name though. Keep hearing that name. and they gave them $75 billion. So that can explain, you know, why they weren't able to pay people back and why they just wanted to freeze their assets. Because 3AC had put money, a whole lot of money into Terra Luna that crashed and left like every one of their customers out of luck. So now you can see a little bit like how one thing can lead to another. So I'm gonna give you a second just to look at this article, Watch Your Guru. And now we're going over to the next slide where I'm gonna explain what Three Arrows Capital is. Since you keep hearing it so much, now you got to be stuck in your head. It's like, oh, no, so what's this Three Arrows Capital you keep talking about? So Three Arrows Capital is a huge crypto hedge fund. So they receive loans from Voyager, BlockFi, and Celsius. So you at least know what Voyager and Celsius is. They had the same thing going on. So you can already guess what happened with BlockFi. So they filed for a Chapter 15 bankruptcy, the company. And they were linked to a lot of bankruptcies going on because Three Arrows, like I said, Three Arrows Capital, if you go back to the other slide, Three Arrows Capital had invested in in the Terra Luna project. So all that money, now you can see all that money that they was given, they lost. And then now all these other exchanges or lending platforms, whatever you want to call them, are going bankrupt. So Terra Luna is a big player in that, and also Three Arrows Capital is a big player in that because they, not only a lot of people went into it, yet they dealt with a lot of people. They had a lot of customers. And then now they're hurting their customers because they're getting hurt. So we're going to go to the article Farcast that I found on Farcast.news, and we're going to go to the Broken Arrow section. So this shows right here what I've been talking about. So any firm with significant exposure to the Terra project was hit hard by the collapse, including 3AC, which had like $200 million invested in Luna Foundation Guard, the organization behind the Terra stablecoin, effectively wiped out when the project went south. That means they lost some money quick. So as 3AC sank into funding trouble, Voyager got hit after disclosing it had loaned over $650 million in USDC stablecoin and Bitcoin too to 3AC, which it might not be getting back. BlockFi was among the lenders that foreclosed on roughly $400 million in loans to 3AC. Now that's a lot of money.
Might not getting back. It might not getting back. You ain't getting it back.
Yeah, you ain't getting it back. And then look how I mentioned BlockFi just like in the last slide too. Man, and then these are some big companies.
Look at the money. Just look at the money. The first one with 3AC, when they were talking about how they invested in Luna, $200 million. Voyager got hit. Talking about they loaned over $650 million.
Oh,
BlockFi, $400 million. And that's not even talking about the past slide.
Oh man.
That's over $1 billion just off of this. Just off of this slide right here is just over $1 billion.
And then that's why you gotta pay attention what's going on. You gotta do your research in order to know what not to do, and then see how all these companies get greedy and then, now the customers is paying for it. But not only that, don't hand over control to your keys too. And then just don't fall for scams like Terra Luna also. So research is very important. Paying attention is very important, and knowing what not to do. You can't just go into the crypto market and be like, oh, I don't know what I'm doing, but I'm gonna do this. No, it's not safe, and you see why. So now we're going to go over to the next slide, and I'm going to bring that. But let's go back to forecast.news real quick. See, I wish I could have highlighted this. Now, 3AC said they had invested $200 million into the Terra Luna, right? But let's go over to the next slide. So I wish I could name this article, but I just got a shot of it right here because I couldn't find a way to go back and at the time too. But another article now this ain't guaranteed, but sometimes you should be skeptical because it says 3AC told Wall Street Journal it had invested $200 million in Luna. Other industry reports said the fund's exposure was around $560 million. Whatever the loss, the investment was rendered virtually worthless when the stablecoin project failed. Meaning, whether they invested $200 million or $560 million, they like all of it's gone regardless because the drop was so bad. But
translation, they ain't getting it back.
Yeah. They ain't getting it back. So I'm not saying it's a guaranteed 560 million, but it might be more than what they told Wall Street. And it's believable too, because if you go back, man, these companies was handing them 400 million, 300 billion, along with that 75. It might have been more than that. I'm just saying it's a possibility. Because I was skeptical in the first place, to be honest, was that just 200 million. It sounds like more than that, but we'll just say it's a possibility. Just keep your eyes open. So just to conclude that there's, even cryptos got a shady side, and it'll get regulated. A lot of things get regulated over time. The wrong people, will get investigated. I ain't gonna say they're gonna get completely caught because some people just keep getting away with doing people dirty. But just do your research, and so you can know what not to do, and just keep your funds safe. Especially from these people, because this shows you a snowball effect. Like one thing can lead to another, and the market dropped like crazy, and there's an explanation for that.
Yeah, so always keep your eyes open and also your wallet's closed.
Oh, yeah. Your wallet's closed and your wallet's cold.
Gotta get that cold storage.
Gotta get a cold storage. Man. But yeah, that's my take on everything. What you got, Belly?
Just a lot of money lost they ain't getting back. This is out of our round. I could claim I lose like 350 or 400 in a trade.
That company's being responsible for everybody else around the world as well.
All this money.
And then another thing too, FTX CEO said a lot, like he said this probably like a month ago, but it's after that Celsius thing happened. He said, oh yeah, more exchanges are insolvent, which means unable to pay the money back that they owe. So he knows something. And then now you're seeing more and more things happen, or more things uncovering. So just keep that in mind. There always could be more. Just keep your eyes open. So that's it for me on that one.
Right here.
This is not a game. Make it easy on yourself. This is not a game.
Make sure y'all do y'all research. Due diligence.
Yep. Do you do diligence? Like, it's good to listen to other people too, but it's good to double check.
Triple check. Don't even double. Triple check.
Oh yeah, so triple check, quadruple check, whatever you need to do. Just like an example, how we showed you different articles, different sides. Like maybe they didn't mean it when they said it like this. Maybe it's like this. Have more than one source, and then use your own judgment.
Multiple sources are telling you the same thing. I mean, multiple. The truth has got to be somewhere in there. There's got to be some concrete truth in that. It may not be to such an exaggerated state, but it is a significant truth lodged in there.
Yes, sir.
So
And then
always pay attention.
that's part of what we do. True, that truth
That
in the
truth,
description.
man. Yes, sir.
Oh
Yes, sir.
man.
But these are the things that happen within the market. And again, we always talk about things can influence the market. Even cryptos, they have nothing to do with the stocks. But all that money lost, other areas are going to feel that. The people have felt that. Investors have felt that. Market influence. And that goes perfectly into the next slide I want to talk about, which is, lo and behold, market influences. So we got to talk about some recent news, kind of serious. And we're going into market influences. One of the things I have said pertaining to market influences, or example would be, is a presidential election. When an election happens, the market fluctuates, whether it increases in price or decreases in price. There will be some type of fluctuation. The market will feel it because it has sentiment behind it, sentiment behind the presidential election. Another example, which I think I gave in a past few episodes, was the health of the president of the US. That is a major influence of the market. The reason I'm saying this, our current president, President Biden, he's been confirmed to have COVID positive. It's positive for COVID. That is bad. That's bad just in itself, but that's also bad for the market because he's not just anybody. This is the president of the United States. And we all know how bad COVID is. We have all felt it. We've all felt this influence. COVID is not a good thing. And especially if the president of the US has it. Not only that, he is up in age as well. He's pretty old. So him having COVID is not really a good thing. Not a good thing for us. And especially it's not
No.
good for the market. Exactly. It's not good at all. Reason being, like declining or unknown health, it creates uncertainty within the market because we don't know what's going to happen. Major mogul companies don't know what's going to happen. We as investors don't know what's going to happen. The whales, the one that's fluctuating all this money, don't know what's going to happen. Declining or unknown health creates uncertainty. Doubt and uncertainty creates fear and opportunity. Again, we don't know. We don't know what's going to happen to them. I'm not going to speak, anything further of that because we don't know what's going to happen. But it does create fear within the market because the worst of the worst could happen, or it could just pass by like it's done. But again, we don't know. So because we don't know, that brings fear. That brings uncertainty, and that also brings opportunity. Good opportunity and bad opportunity. So the ones who understand influences and market context, we prepare and strategize ahead of time just to be a little bit safer. Because again, we don't know. As a passive investor, as an active trader, you must withhold and upheld your mental fortitude because we do not know. Because we know this creates fear and market uncertainty, we have to kind of stand strong in the face of it. We know there's fear out there. We can't let the fear consume us because that's going to flaw our judgment within the market. It's going to flaw our judgment within making trades. It's going to flaw our judgments within doing passive investing. We don't know which route this is going to take, but we can assume what other routes other people are going to take because of FOMO, because of fear. And all of this brings an opportunity for them. And it also brings an opportunity for us, the ones who prepare. And at the bottom, I have some demonstrations of kind of world changing events that happen, or even small scale, not to the point that were insignificant, but it didn't happen to the rest of the world It just happened within a country. And here's a little chart. And I know at the top says despite market pullbacks, stocks have risen over the long term, which is true. But if you sit back and look at it, every world changing event, the market dropped. The economy was doing great. Something happened, the market dropped. It'll get itself back off its feet. Something would happen, the market would drop. And it continues to happen. And we can look at it from all the way to around, let's say what, 1990, collapse of the USSR and Berlin Wall. You can't see it because it's so small, but I'm pretty sure it's a drop. And we can fast forward to around the 2000s, .com bubble burst. It dropped. 9/11, it was up here, it dropped. The global financial crisis, which was the 2008, 2009 Great Depression, not Great Depression, but recession. I'm sorry, excuse me, recession. It dropped. Every single world changing event happens, the market will drop. And now we have something newer alongside of us, which is cryptos. When world changing events happens, or even somewhat smaller scales that happens within the company or the country, they will affect us. They're a part of us now to a certain extent. So whatever pressure they feel, we're going to get some of it. Especially with this whole Terra Luna situation and Celsius and the 3A one. Whatever
Yeah.
the end goal for
3AC.
that. 3AC, that's what it is. I couldn't remember the last letter. With 3AC, whatever's going on then, when everything finally comes to light, I'm pretty sure it might shake the market a little bit. And I know it definitely has, with all that money being lost, and they're not getting that back. Not getting it back.
Yeah, so they got to get it from somewhere. Digging in their stock shares. All right.
Exactly. And because of all these things, again, I'll emphasize on the last point: the one who understands influences and market context, prepare and strategize ahead of time just to be safe. I know all these things are happening and going on. Some people won't place trades, or even some will still invest. Some won't place active trades within this time. Or when they do, they're a lot more cautious because they know what's surrounding this. Some do hedge funds. They hedge the risk. And again, like I said, some don't trade at all. Some will buy certain stocks they know that they have a certain idea that can withhold, or they can hold up against this storm that they're facing. There's a particular stock called VIX. VIX is, think of it as the opposite of SPY. As SPY is going up, VIX is going down. If VIX is going up, SPY will go down. Some have investments in VIX to hedge against certain things that happen within the market. Again, do your research, understand what's happening around the world. If not the world, at least the things that affect your country.
Yeah, man. And then and then a lot of this stuff, within the conversation we just had brings us back to, like, for one, the bonds between cryptos and stocks, how we explain how they are alike, and then how they affect each other, how they can affect each other too. And then not only that, but Belly was talking about this earlier. We talking about understanding people's psychology in the market, because it is a mind game. The market is going to mess with you, and it's going to mess with everybody else too. So, understanding, like, how people think is part of the game too. Just like you said, with these events going on, and especially with the thing that happened in Ukraine, and then some of the stuff that happened in the past, also like in the 90s. That can just bring down the market too. Like a lot of fear and uncertainty. So, it's so crazy, like, it's so accurate. Like, they even got a whole chart of just different sides, like how people feel. The psychology, like for like you see an uptrend, it's excitement, and then you see like then it goes down a little bit. It's like uncertainty, and then you see it goes way down in this fear and panic and all that. Just to give you an example, like they got a whole chart of people's psychology in the market because it's so accurate.
Exactly. Your psychology will affect your returns within the market, your actions. It literally affects your actions, whether you make a successful trade, not even successful. Was your trade placed strategically? Talking about current active traders and passive investors. Your mental health and your mental status affects all that. And even if you have an ironclad will, there are others in the market that most definitely are not going to have that. So they are going to do certain moves that just doesn't line up with you, that can mess you up or cause you to have FOMO because again, everybody else is doing it. But stick to your strategy. You know what works. Understand market influence. Do your research. If you know all the information you have to a certain extent is correct, the statistics stand up, you still have your edge and you have a strategy and you have tactics and everything. You're reading the chart correctly. You've done your technical analysis. You've done your fundamental analysis. And everything is telling you to do one thing, but everybody else in the market is doing another. Stick to the ladder. Stick to what you know. Stick to what the market and all the information is telling you, not what everybody else is and what everybody else is doing. You do what everybody else is doing, you'll get caught up in their wave and you'll never surf out of it.
Yep. Yep, that's true. And then if you have been in it for a long time, you know exactly what we're talking about. Because, yeah, I mean, both of us are saying it. Now it's time for y'all, the newcomers, to see for yourselves, when y'all get into this game, how that's going to, is going to keep you from getting gains. Everybody, chasing the same thing. Be like, oh, man, this going to go up, this going to go up, or just reading or just saying, for example, seeing an article that's going to talk like bad about something like that they're going to go out of business. But then once they start going up, then, like after everybody already sold, then now they're talking good about it. So yeah, just further your research.
Exactly. Follow your research. Don't do what everybody else do. Like Money said, don't be that dude. Don't be that person. Oh, you need to buy stock XYZ. Everybody's getting in on it. Everybody's making money. My cousin Gerald made money off of this, so I'm going to hop into too, man. I'm trying to give you a chance. Don't be that dude to hop in and follow him because of what he said. Because by the time you hear about it and the time is blowing up and the time he's telling you to do that, the hype is already gone. You've already missed the wave. To me, that's how I see it.
Yeah, and then this goes back to Richard Hart. What he's been saying, especially in that debate, but he's been saying this like it's the same thing with Bitcoin. Like the higher it was, like more and more people wanted to buy it, which is backwards because like when it was 70K, then you had to wait for like 140 to double your money. You want to put money in Bitcoin, and then there's 70K, not financial advice, but I'm saying. And then he mentioned all the big players already bought. Already bought. So that's why it's going to like way down like it is now.
Exactly. And this goes back into the episode we just covered talking about market terminology of buying at the all-time high. When Bitcoin was at like 70,000, that was around the all-time high. And remember what I said, stocks, cryptos, regardless, when it meets the all-time high, it has a nasty habit of dropping and crashing. It may not be instantaneously, but it's definitely going to drop at some point or crash. And then, like Money said, everybody was buying at this point. Why would you buy at the all-time high? If I know I can get it for a cheaper price, it has to breathe at some point. It's not going to keep shooting straight up. Why would you buy it at 70K when you had a chance and knew when it was around like 30K, 40K, 50K? You had all them chances. Why wait till it's at the highest and everybody's talking about it? You have to buy the stock of crypto when it's an underlying one. And what I mean by that is unknown. It's the underdog. Not too many people know about it. Not too many people are expecting it to fight and rise up. You have to buy those stocks and cryptos around that time, not when everybody else has already got a hand in it. Another reason that I wouldn't have bought it at that time, or I don't even know why they bought it at that time. If say Bitcoin was trading at like 20, 30K, all of a sudden it rose to 70K. If you bought it at 20K, matter of fact, if you bought it when it was worth like $1,000 and it went up
Oh,
70K, yeah, I wish I bought it when it was like $1,000. If I just got one.
life changing.
Exactly. But say you bought it at 1,000 and it rose up to 70K, what you gonna do?
Yeah, hopefully not buy it at 70K.
No,
And
you're gonna
it's
sell it. If you bought it
uh,
when it was $1,000 and it's worth 70K, you're gonna sell it. I hope you would.
you're gonna sell it. Hopefully you don't be like the newcomers, just buy more and more. Be like, oh yeah, I'm gonna buy more 70K
No,
Bitcoin and expect the profit. No, if you had already bought it before and it's at 70K, man, I would sell it if I had bought it for 1,000. That's just me. And then it went all the way to 70K.
I probably
Just
wouldn't even let it
one
get to
is life
70K.
changing.
I probably would have sold it at like 40. I probably would have sold it at 30. Who
Yeah,
cares? I would have made a profit.
people was not expecting it to go that high too. And then the crazy thing is, Richard Hart also said this, like the best time, like the that you could have bought Bitcoin is when the creator had most of the coins. And then that's with anything for real, like when the shares won't even being bought like that. Cause they had the right price, which is low, a way lower price, better opportunity.
Exactly. And this goes into your research because you don't know even when you do all your research, you still won't know, but it gives yourself some like more information, some more confidence that I truly think this will be an amazing stock of crypto in the future. Probably not right now, but in the future, it will be something. It will be something in the future. Place your bets. That's what an investment is. You invest for the future. It may not be anything now, but if I invest in it in the future, I know it can do well. That's what an investment is. So the people buying at 70K were dumb. Because if I bought Bitcoin at 1,000 at 70K, I'm selling. And what do you think the rest of the world is doing? They're selling their liquidity. Well, not liquidity. They're selling their shares of Bitcoin at 70K. Everybody is taking profit. So in order to take profit, you have to sell off Bitcoin, aka you're dumping your shares, you're dumping your crypto. Everybody around the world is dumping their shares or holdings of Bitcoin. There's a lot. That means it's creating a lot of supply, but not enough demand. Because everybody's selling, nobody's buying. There's a lot of supply for it, but not enough demand. So therefore, the price has to drop. And boy, did it drop.
Yes, man, and boy, did it drop. And some people are predicting it, is going to drop even further. But I mean, the more educated you get on the stuff, the more educated your guesses should be, instead of just following the wave and then just getting wrecked like everybody else. Because, like, the odds is always going to be against you, you know. Less likely they're just gambling, but you know what I mean.
Exactly. At the end of the day, we don't know. Some people say Bitcoin won't even be a thing in the future. That it was created just to be the first of its kind. And basically, a lot of people say it's done its job. It became the first of its kind. It's done its duty. It ran the race. He completed it. His job is done. Take a seat. Retire. That's why a lot of people think Bitcoin will be in the future. A thing of the past, a memory. Just an accolade. A Hall of Famer. That's it. And I can see why.
Yeah, yeah, and I can see why too. So I'm not bashing Bitcoin. We're not bashing Bitcoin. We're just stating the facts. And a little bit of common sense too. And yeah, Bitcoin is always going to be the grandfather that got the grandfather of all the cryptos because it's the first to get big like that and to do what it's due. And then so like even when I teach about crypto, I go back to Bitcoin because that's where it started. But things advance, and Bitcoin is not catching up. But I'm gonna just stop at that. Stop at there. It already did. All the big players already bought. went to the highest price we ever seen, and it's the first to do what it did. But
Exactly.
yeah, but other than that, though, we're just going to go ahead and close this episode out. We dropped a lot of jewels, and then we're going to continue dropping recent news, and and then you see now that we switch it up, like we're doing a lot more showing, and then that's what these presentations are for, rather than just talking, so you can see some of the things and read some of the stuff for yourself. But we still, the episodes are still good. Feel free if you want to watch the past episodes to learn something, because we dropped a lot of jewels in that ones too. All on your own time. But yeah, from now on, we're doing the recent news. So that's what we're gonna be doing.
Exactly, and more so in the future, we start ramping things up a bit. We're gonna start getting in more, I guess, into the intermediate level of stocks and cryptos. It's gonna be a little bit more advanced. We've been trying to keep it beginner friendly as much as possible, but you can only do so much where stocks and cryptos is not beginner anyway. It's a thing you have to really learn. It's kind of an advanced thing anyway, so it's kind of hard to keep it at beginner.
Yeah, since we got to, keep advancing in the way we invest, we got to do the same thing for the content. And, that's that. So, we did keep it beginner friendly, like for a lot of episodes too. We covered like a whole lot of concepts. So don't worry, it's in the past episode. You can always go back. But as you're going forward, you're gonna have to. That's when you start doing that research, and pay attention to what's going on, and then hopefully, this content better you as an investor, because you're more aware of the things that are going on.
Exactly, like Money said, understand market context. But again, this isn't financial advice. We just like to talk about money. Ain't that right, Money?
Oh yeah, we just like to talk about money, and money talks too.
Yeah, this is just for entertainment purposes only.
Yep. Until next time.
Yeah, so make sure y'all like, comment, subscribe, run the likes up. We'll catch y'all next time.
All right, peace.